We look at all the large IPOs. As I said, I guess you've got to assess their quality, you've got to assess the motivation of the vendor, you've got to assess their pricing, you've got to look at their balance sheet, all those things. In the case of many private equity floats, as I said, many of those companies are coming from very motivated vendors, whose job is to maximise their proceeds. That's the job of a private equity fund. So obviously one's got to be a little bit extra cautious. I guess you don't get the same perhaps tension in pricing when something's coming out of being spun out of a company, or like Woolworths spun out Shopping Centres Australia. There's probably less need when you're selling it to existing shareholders to extract the maximum cent out of those people. Same with the government, I guess. They don't really want to, while they want to get a good price for the Commonwealth, there's probably some motivation to leave a little bit on the table for the potential votes at the next election, I guess. So that is a very important thing. But again, Medibank, of course, everybody will be looking at. It's going to be a question of pricing now, because it's obviously going to be a very, very popular float amongst not just the institutions but the retail. So it's all going to come down to pricing, when those details are released.
So it's more, at this stage, it's more about the price rather than the quality of the business?
I think the quality of the business is fairly well known. There are a couple of minor issues and restructurings they're going through, but it is going to come down to price, yes.